With more and more homes coming on the market and price drops happening across the nation, what does that mean for the future of housing? Well, I took some time and talked to a friend of mine, Ryan, who is actually an appraiser and also an analyst with regards to data. He's located up in the Sacramento market, and at the moment, one of the bigger markets that's being affected with all the new supply coming to the market. So I thought it would be helpful to put that conversation out there for everyone to see, to get another take on what the market looks like from somebody that's not actually looking at predicting at what's going to happen, but more looking at the data on a daily basis to help make sense of what is going on. As you can see from this conversation, he's not really biased on housing crashing and he's not really biased on housing going up, but he does provide some valuable insight, which I want you to check out. So with that said, let's dive into it. All right. With that said, let's welcome Ryan to the show. Ryan, I appreciate you being here. I think it's important to start off, give the viewers out there a little bit of background, where you're coming from. Obviously, I mentioned that you're an appraiser. You obviously look at a lot of data out there, but boots on the ground in the market. Maybe, tell people how long you've been doing this and a little bit about yourself.
Yeah, no. And thanks. It's an honor to be here and looking forward to a conversation. Tag me in the comments. Let's, talk shop. But I've been an appraiser since 2003. And, I'm kind of a housing analyst in our area too. I mean, I'm crunching numbers galore all day long and just sort of telling the story of the market. And so, I do appraisals full time and sort of market analysis also. And so that's me in a nutshell. I love the numbers, but I love the story more than the numbers. I think that's the more interesting aspect.
No, I agreed 100%. I think it's important too to mention that you and I haven't really had a conversation prior to the conversation that we're going to have online here. We haven't talked about your opinions of the housing market. I'm going to be, if you tell me it's crashing tomorrow, I'm going to be as shocked as the people listening on the other side of it. But I brought you on because well respected in your industry. Obviously, like you mentioned, you look at a lot of data. I mean, I think it's a passion project at this point. You run an awesome vlog. You're located in Northern California. So if you're around that Sacramento market, definitely worth your time to read on there and pay attention to it. And I'll link to that in the description below so you can check it out. Also a YouTube channel. I'm not sure you do much with it these days, but you can follow him in both places. But let's just start here. I mean, I think question is, or the premise is the market is slowing. I think we can all agree on that narrative. The market is slowing. So you as an appraiser, somebody crunching numbers at the moment, what does that mean to you? What are you actually seeing in the market at this time?
Sure. So I would say it's more than just slowing because we've seen a sharp contraction. And so it's almost like mortgage rates essentially doubled. And for a long time, I think people were saying, hey, nothing can touch this housing market. It's so fast and inventory is so low. And then it's almost like mortgage rates said, hold my beer. And we've seen this market that is significantly different. And so I would say that there was a really sharp change in the stats, especially between May and June to July. And then now we're in this place where I think the stats are sort of trying to figure out maybe somewhat more normalcy. Not saying that the market's normal, but just a vast difference where all of a sudden we went from this rapid steroid market to properties on average are taking over 30 days to sell. And so it's sort of like you look at all the stats, it's taking twice as long to sell this year, or there's about half as many properties or even less that are selling above the list price, or on average this month, there were properties, about 50% of them had a price reduction. And so the stats are way lopsided compared to last year. Some of them look fairly normal, but I think the big thing is that there's been a dip in volume. And so we're missing about 30% of the market right now. And so there's no sugarcoating that. But at the same time, it could be worse, to be fair, but it's sort of like there was this immediate reaction where buyers, I think, looked at affordability and the monthly mortgage payment be, $600 or so more per month. And, they really stepped back. And, and at the same time, we're experiencing this dynamic where there's really not more sellers listing. And so in my area in Sacramento, we peaked in June with new listings hitting the market. And so the supply has kind of felt anemic, except for you have so many buyers that backed off. And then all of a sudden, we do have about 2,000 more listings than last year because of fewer buyers playing the market. So it's like all those properties would have normally gotten into contract, but instead they're active on the market. And so it feels like it's been a weird dynamic, but even it's still not a normal number. We're still actually lower than we should be, but it feels so substantially different than last year at the same time. And I think the big question, what are prices doing? It's been a more definitive price drop since May. Normally the market sort of peaks in June. It happened a month early this year, and definitely more pronounced. The median price has lost about $40,000, or about 6 to 6.5% so far since May. And normally that's maybe half that or so. And so definitely feeling it, I think, when pulling comps and when looking at the numbers.
Now, with that said, all really important points, and you said a couple of things there I want to touch on. But the last thing you mentioned is median price, and I think a lot of people get caught up in the median price because it's what Case-Shiller puts out, it's what Fannie Mae, and just all of these people have their number that they post with regards to median price. So when you see the median price, are you I don't know, worried's not the right word, but when you see a number go down like that, do you, as a data analyst, somebody looking at numbers, think, okay, there's less property selling at a higher price point, therefore we're seeing that median number drop because maybe more lower sales are happening, right? Because the median isn't the average. Or do you look at that and say, okay, this is a sign that, prices are going to continue to decline because there's something else going on in the market?
Well, so prices should be declining right now at this time of year. That's the most normal thing in the world. Like normally our median price should be dipping around 2%, maybe 3% in a year that's a little more dull at this time. And so we're basically about twice that. But yeah, I mean, we have to understand, the strengths and weaknesses of each metric. And so I look at median, I look at average price per square foot, I'm looking at comps, all that stuff. But one of the things that we are seeing, homes are slightly smaller today, the ones selling, than they were last year. And we saw this massive change in the market over a couple of years. At the beginning of the pandemic, people were buying more expensive, larger stuff. And so there was this real shift in the marketplace, and that affected the stats. And right now it's like there's a shift where I think we're seeing a little bit smaller. And I think some of the neighborhoods that are maybe doing a little better than others, based on some stats I published and put out there this week, at first-time buyer neighborhoods. And so volume is down 20 to 30% easily in most neighborhoods in my local market. I would say probably in a lot of areas around the state, to be honest. But you can see some first-time buyer markets maybe only down 10% or 5%, or there's a couple neighborhoods that I look and go, wow, it's almost the same level of volume as last year at the same time. And so long story short, when we look at the median price, obviously we have to consider what's making this price change. And part of that, it's a smaller product, but I gotta say, it's not just smaller homes that's causing a change. Because when I'm out there appraising and looking at properties or talking to agents or responding to hundreds of DMs, or tweets or whatever each month, it's across the board. And even I think in the state of California, you look at price ranges, and every single price range has contracted. Okay, and you look at that based on CAR stats, but you can kind of see that. We're at the very beginning of this. It almost looks like maybe the lowest prices aren't contracting as much as the highest. But look, we're in the midst of change. I think we need time to understand this. It's almost like we're in this, place where we're a caterpillar, and then what going to turn into a butterfly, and we're just in the midst, in the thick of that change.
I agree, and you mentioned something too about sellers. You've reached your peak in inventory, I think, or you at least demand, back in June or July, you mentioned. Now, a lot of people out there believe that we were going to continue to see this inventory, go up through the remainder of the year. I came out a couple of weeks ago and said, hey, listen, I'm actually looking at the numbers week over week, and I'm starting to see a decline. I think we've peaked in inventory. We've definitely peaked in demand. So I think for the remainder of the year, inventory probably stays about where it is and goes lower. It doesn't go any higher, in my personal opinion. And that's a lot to do with, sellers For one, affordability being a problem, homes being more expensive because they've gone up in price, also being more expensive because interest rates are higher, and the fact that they're going from a super low payment to a higher payment, and that's affecting inventory out there. So you can touch on that, Ryan, but on top of that, how does that affect the future of what we see? Because, we're going to see a natural slowdown in the market this time of year. Like you mentioned, it's normal. It's normal to see houses sit on the market longer. It's normal to see houses pulled off the market, sales to go down because of the holidays and kids back at school and just seasonality, right? We're starting to get some seasonality again, which is a welcomed part of the market that we missed for the last couple of years. But how is that going to affect the market going forward? I mean, obviously you don't have a crystal ball, but you look at a lot of data. So what are your thoughts on that?
Yeah, well, that's always a big question. What's the market going to do? And I think one of our tasks today, we have to ask what is normal and what is not. We really have to understand what happens seasonally. And I think where a lot of people get it wrong is that, they come and they have this one big idea about the market, and then they impose that on every single stat, or they sniff out, doom in every single stat, or they're like, I'm wearing my rose-colored glasses, and here's this tiny little sliver of positive data, and I'm going to,
Talking about me.
hang on that. And so, I would say obviously what happens with inventory is a really big deal. I would say that we still do have a shortage of new listings coming to the market. Like I said before, the culprit for changing inventory, technically we're seeing more listings because we've seen few buyers. And so, it's a problem. That could be an issue also in the future. But in my mind, it hinges right now. We're going to have to look at mortgage rates. We have a market that's very sensitive to rate changes. And so rates go down, then that puts more demand into the market. Rates go up, and that takes some fuel out. And so I think for the immediate future, we're poised to have this market that is experiencing seasonality, where days on market should be increasing, prices should be softening. We should see more credits being offered to buyers, and all the things that we normally see at this time of year. Okay, and in a sense, the fall becomes like a market of leftovers. Okay, where all the good product in the bigger houses, all that stuff, was sold in the spring, and then we start to see sort of this market where there's not as much out there. Okay, and so I expect to see that. In terms of have we entered a new cycle, I think we need time to see the trends. And frankly, we're going to have to see how this plays out. My big concern in California and in Sacramento is housing affordability. And when you look at California Association of Realtors, they would say in the state of California that 16% of households can afford the median price. That's a really low number. Okay. Now in 2007, that was 11%. So yeah, it could get worse. Or in my market, I think the number is 27%, if I'm remembering correctly. And that's not as high as we need it to be. And so it's possible that, buyers will get used to the market. I think that's what we're seeing right now statistically. This really, really sharp change from May to July, it's sort of flattening out. And so it's like pendings were screaming down, and then now we're seeing about, this line where 30%, we're down 30%. So instead of going like way down, pendings are down 10%, then 20% in volume, and then they go down to 30%. It's not going down to 40% this month. And so it's almost like this, finding a little bit more equilibrium. And I'm hearing echoes of that on the national level. I'm seeing other markets across the country where you're starting to see price reductions look like they're leveling off, whether it's a glance at Redfin data with, an area like Boise, it's had the most price reductions. Or in my market, you look at Altos Research or my own stats, and you're starting to see that, okay, price reductions got up to about half the market, and now they're sort of, flirting with just that line instead of going up to 60% and 70%. And so I think that in a sense, buyers sort of have to find their new place. Sellers have to find their new place. We're seeing sellers that are offering more credits, that are, having, one offer only, maybe two, and they're just having to lower the price. I think buyers are getting really used to paying below the list price. Makes sense in an overpriced market, but all these things are sort of leading to, we're going to have some weird stats over the next couple of months. With properties selling below list price. But, we're also, I think, positioning ourselves for, I think, maybe more softness through the fall and then we'll see what happens. So I feel like I just vomited a bunch of stuff out there. I said everything and nothing, but it's hard to predict next year. I just say that there's not a mechanism in place for buyers to afford the market at these high prices unless rates go down or unless prices go down or something changes with the economy or wages. And so, if prices are to remain stable, then we're going to still see this missing portion of the market. There's fewer people that can participate. And I just think we have to be real about that.
No, and something you said, we all have our biases, whether it's real estate or something else. And
Sure.
I'm bullish on real estate. So I can, somebody comes out with a stat, I can make it sound however I want to make it sound in some regard. And some people could do it on the other side. But, that's why we have these conversations like this, is to bring up, hey, listen, what are you seeing in the market? What is your feel? You're a guy that's been looking at data, and analyzing this prior to the craziness that we've seen. So that's important. I just know how important real estate is. And that's, again, one piece of this channel. But you mentioned, price reductions happening right now, 40, 50% or whatever the number is in your market. What was normal prior? Because I don't think everybody understands that price reductions are a normal piece of the market. We just didn't see a lot of them in the last 2 years because of where things were, right? So, but what's a normal market look like where you are with regards to price reductions?
Absolutely. So let's see, around this time, and I'm taking actually this from Altos Research directly right now. So about maybe, say 35% or so of the market maybe had price reductions at this time of year in 2019. And now that's more like 50%.
Right.
And so they would say 48. And so it's definitely above normal, but it's not like last year was about half as much, and we have to look at last year and go, but that wasn't normal. We can't base all the trend on this crazy lopsided number. And so I don't have awesome research before that. I could extract it technically, but
I think that's good. I think, again, the point I was just trying to get across and is that normal, price reductions are normal, right? Not everybody prices their house correctly from the start for one reason or another. And so the fact that you're seeing price reductions, that's a good thing for buyers out there, but it's not the end all to say, hey, listen, this is the beginning of something more. Maybe it is, but maybe it's not, just because of where we are. So let's lighten it up a little bit. So Ryan, an appraiser, you mentioned, I think first and foremost, data's secondary, or maybe it's become first at the moment, but you're out there looking at properties. What percentage of properties are you seeing at the moment? Maybe you don't have a percentage, but are properties still appraising, or are you having an issue where people are still getting the number that they wanted with regards to the sales price, but the comps aren't supporting it?
So I would say this, I have lots of conversations. I speak somewhere probably at least once a week. And so I'm interacting with a ton of people, talking with people about the market, seeing what's on my desk. Properties are always appraising. Are they appraising lower or higher? I know what you mean, but
right.
I'm not hearing about any mass issues with properties coming in below the contract price. That's, first of all, not a bad thing. It should happen in a normal market, okay? And so I hear isolated stories. There's been nothing in news media picking up on this. I'm hardly hearing at all about anything in my DMs. Not hearing much from colleagues, and so I'd say it's unlike the first quarter of 2021, where there were some stats pushed out by CoreLogic, nearing about 18-20% of the market coming in below, so to speak. Like nothing like that at all. I don't have a percentage, but I would just say it's almost a non-issue. One good thing right now is that appraisers who are doing lender work, who are doing work for loans, they're not as busy. Refinances have fallen off a cliff, volume's down, and so I would think that turn times are going to be much faster, getting the appraiser out there faster, and sort of that helps to hopefully, after this property has been vetted on the open market, hopefully the appraiser's kind of coming in to ratify and say, yeah, the buyer and seller did a good job. We're in a good place here. And so, but yeah, there's always examples of properties that get into contract for way too high, and the appraiser's not a magician. You can't just rubber stamp something that's not realistic. But otherwise, not an issue.
Got it. So final thoughts on the market, and then I've heard you mention the word normal a handful of times with regards to, just in the conversation here. Not asking for predictions, just thoughts on the market in general. Are you worried? Are you not worried? Are you, how do you feel?
I'd say stats aren't positive or negative. And so I try to sort of stay objective and to just realize that we need time to see the trend. Like I was doing a Zoom market update the other day and someone said, well, what are prices going to be doing next year? And then I just turned the table and said, what's Bitcoin going to be worth in 1 year? Are mom jeans going to still be popular? Or like the list could go on and on and on. And the reality is that the future hasn't happened yet. And people hate when I say that, but that's the truth, is that we need time to see the trend. Right now, we're living in the midst of change. And so I'd say the market, though, it's not the same for everyone. Okay. And so I think sometimes we hear this isolated story and think that sort of typifies absolutely everything out there. But I just remind people that 40% of the market had multiple offers over the past 2 weeks in my area, right? Or about 30% of sales last month sold above the original list price. And so it's not this market where everything is selling below and everything's a fire sale. And in fact, I would say that, there was a property in my market that had 4 offers. It was listed at $350. I know not SoCal prices, but it's listed at $350,000. There were 4 offers. One of them was at $360. That was the accepted. One of them was at $350. One of them was at $345. And then you had Mr. Lowball at $230. And it's kind of like, I think that a lot of the world right now is looking on real estate and going, I'm just going to lowball, 30, 35% below, the list price. And that doesn't work today unless that's where value is. And so I think that we have to sort of sift through any hype, any doom and gloom, any rosy narrative and go, where is the actual market, and concede that we need time to work it out to see the trend. And so that sounds very general, but I think that it's true and it's reasonable.
And last thing I'll ask about that is what do you define as a trend? Like how many months do you need to say this is a trend? I mean, because the trend's always changing, right? New data is always coming out. More properties are coming on or more properties are going off. You got seasonality. So what, in your eyes, when are you comfortable saying, hey, this is what's, happening? Or is it always, the data is always changing, therefore you kind of got to watch it?
That's a good question. And it's sort of like if I'm at the mall and I see one guy wearing a fanny pack, I don't want to just say like, hey, it's the new trend. Like I want to see multiple people and I want to get a sense that like, wow, this is happening everywhere. And so I think we have to apply that to data, and we have to just realize that, having a few weeks is probably a good idea to like our price reductions really leveling. That's what it looks like. And I started to say that last week after I had seen it in the data for a few weeks. I noticed it a few weeks ago, but I didn't want to just, jump out there because I'm like, I need a little bit of time here. But I also just have to ask, is this normal for the time of year? And then if it is, and we're like, this is completely normal, this is what should be happening. And so, it's like constantly sifting through all that stuff.
No, all good stuff. So, Ryan, I appreciate you being here. I think there's a lot of value in today's conversation for buyers and sellers. Anybody trying to time the market, right? It's, as I always say, timing the market is impossible. It's time in the market that you need to pay attention to. And if you're buying for the right reasons, it's never a bad time. So with that said, Ryan, where can people find you online?
I'm Sac Appraiser on Twitter and Instagram, or SacramentoAppraisalBlog.com is my place. I publish something once a week.
All right. You mentioned Twitter and any other? You on TikTok? You dancing on TikTok?
I don't do TikTok. I'm maxed out in life. Technically, I have YouTube, but I haven't posted a video in there forever. I just can't do it all.
No, understood. So go check him out on his blog. He said DM him if you have questions. But either way, we appreciate you being here, Ryan. I appreciate everybody's support. We will see you again soon. Adios.
Thanks, Jim.
So hopefully you guys found some value in that conversation. But with that said, I'd love to know your thoughts. Where do you think the housing market is going? And why do you think it's going that direction? Would love to know. And if you found any value today, be sure and hit that thumbs up, and feel free to subscribe to the channel to stay updated on everything real estate related.